All right. Hello, everybody. Welcome to the market open on today's date, January 23rd, 2023. Hello, everybody. Shem Pasta, what's up? Philip Rizzo, what's up? Kane. I hope Amit is on time. Sometimes that IST kicks in. I am here. Morning, John. Ruksha, good morning. Wish you all a great week. Tesla, we've got Tesla earnings this week. It's going to be exciting. All right, Amit, Paul, good morning. Cameron, Felicia, when Tesla going to go red to buy? Well, at 130, I still think it's not a horrible price, but after earnings, if we don't do that well, then we're going to get a little bit more of an opportunity. It's crazy. Tesla went to 102. Everyone was scared, including myself, massively scared. And now we're all coming back to reality that there really is no competitor to Tesla. So let's see if Q1 earnings gives us another opportunity. And if it doesn't, then you DCA. And if it does, then you go even harder. Amit, I'm scared, mate. Market is giving me the heebie-jeebies. After earnings, good morning, Saskia Rose. Good morning, Anthony Johnson. Videos in 320p. Give it a second. It'll load back. Fundamentals of investing. Tevis, thank you for being here. It's being a little dumb. Just give it a second. The Wi-Fi should come back. Let me also exit out of some tabs. I brought a brand new computer, and you would think that it's able to handle it, and it's just not. And maybe I need a new monitor too. That would probably help. But at least the audio should be good. Give it like 2 minutes, and I think the video will be better in a second. All right, we've got a lot of news to cover, a lot of stuff to go into. Thank you all for being here. Really appreciate you all being here. Market has beaten us into disbelief every time we rally. I agree. And again, I don't think Tesla is expensive right now. I think it's pretty cheap. It's just at 100, we thought it was all expensive, which is the kind of insaneness of this market. It has us all on our heels, given everything that's happened over the past year. Now, a couple of big news updates before we get into some interesting things that are going on in the market and stocks in particular. Spotify announced layoffs today. Spotify issued a letter. They have 9,800 employees. It is unclear how many people they are laying off, but they are laying off people. Their argument is that their OPEX exceeded their revenue by 2x over the past year. And in any macroeconomic environment that is not stable, in this macroeconomic environment, that is absolutely not stable. So it makes sense why Spotify ultimately has to deal with layoffs. It's an interesting thing. All big tech companies have done it. Google, 12,000 layoffs. We'll talk about a shareholder who is worth $7.9 billion who thinks Google needs to lay off another 10, 15,000 people if they really want to become a business that is going to get more shareholder dollars. We'll talk about that in a second. But Google, Coinbase, Apple hasn't necessarily yet. Facebook has already done it. And so now next up is Spotify. Interesting companies to look out for are Microsoft with LinkedIn in particular and Netflix. Netflix did a couple of layoffs, but it wasn't a massive wide-scale restructuring of the organization. So that's the first thing on Netflix. Second of all, OpenAI just received an investment of $10 billion by Microsoft. This happened literally 3 minutes ago. Makes sense that Microsoft is investing in OpenAI. ChatGPT has pretty much taken over the world, and everyone is incredibly excited to see where ChatGPT will go. But, the specifics of the investment are going to be interesting to see, especially given that OpenAI was structured as a nonprofit and now it's transitioning into a profit-based organization. And so we'll see how they're going to be able to make out that deal and how it comes. The Wi-Fi is still being a little weird. Give it just a second. It should. Oh, I think I know why the Wi-Fi is bad. Is this the reason? No, that might not be the reason. Okay, let's just give it another second. It should come back to normal. Good morning, Pixelated Emit. I'm sorry. It should be back. Zocold, good morning. Edgar Silver, good morning as well. Tesla earnings are this week as well. So let's get into the market right now and let's see what's going on with Tesla. I just did a video today recapping some of Netflix's earnings. So we'll talk about that. Martin Van Gelder, thank you for being here. Hello to you. And so we can discuss a little bit about Netflix as well. Netflix is trading at a 94 times price to free cash flow ratio. Now, why is this ratio important? It's a ratio that I've been digging into a lot more as we go into Netflix right here, down about 0.37% of the market in the pre-market. Price to free cash flow is one of the most, I think, accurate ways to describe the overall health of a business. How much free cash flow is the business generating, which is, a lot of people have argued a better determination of like the actual earnings of the company, how much cash they have. And then what is the price you're paying for that free cash flow? And at the end of the day, if you are paying, a lot of money for a level of cash flow that is potentially not growing as much as it needs to grow, then a company can be expensive, like Disney. In a macroeconomic environment that doesn't care, like 2020, it doesn't matter. But in a macroeconomic environment that does care, like I would say now, then it would also matter as well. Tesla is at 135 pre-market. It's one of the few stocks that are green in the pre-markets. A lot of other stocks are red. Let's see Spotify, given their layoffs. Investors must definitely be happy. Yeah, look at that. Spotify, amazing, up 5%. Spotify increased their market cap by about $1 billion by laying off their employees today. Simply because, the market is excited that there's finally some cost controls going on into Spotify. I asked ChatGPT to write a poem about my wife, LOL, and I must say it was brilliant. ChatGPT also released their pricing. That's another piece of news I forgot to mention. $42 a month. That is the official ChatGPT price that came out over the weekend. Now, will they change that? Maybe, but are people willing to pay that? I think some hardcore people that are going to be power users of it, yes, are willing to pay $42 a month. It's a hell of a price paying $42 a month for this. I can't imagine myself. I mean, I could imagine myself paying for it, but at this moment, I don't literally need it to do that many things. I think it also defeats the purpose of kind of being a natural search engine, which is why this whole idea of it's going to replace Google. It's like, no, you're not paying $42 a month to search up a good restaurant near you and the best rating. If you pay the $42 a month, you might use it for that instance. But the core reason people are paying $42 a month is likely because they need like a copywriter and they don't want to pay someone, and they'd rather pay $42 a month for ChatGPT to do all the copywriting. So that's kind of the main reason. GRK, hello. Jason, Richard, hello. Arnold the Palmer, worse than OG Twitter blue prices. That is true. I mean, it's definitely pretty expensive using it. That's so weird, man. I don't know why the Wi-Fi is being like this. It's being a little interesting being down here. I think that's why my computer was slow this morning as well. I guess the Wi-Fi was just down. I would give it another couple minutes, guys, and if it doesn't, then I'll try to change the Wi-Fi, but hopefully it gets there. So we've got Tesla at 133, Netflix at 342, Black Sky, Palantir's back at 170. Palantir, we had a nice little debate over our Palantir Weekly podcast. I'm doing a video kind of summarizing that debate. That'll be up on the channel a little bit, which was about Karp's salesmanship and if he actually was able to close a deal in a meaningful way. A lot of people have argued that it was not the right way to close the deal, but a lot of other people, including Palantir, because now they're using that clip as advertising, have argued that actually that was one of the best things he could have done in that moment. So you got Palantir at $7, 0.14%, NASDAQ 11,140. One of the cash secured puts that I'm looking into on SoFi is the $5 strike price. I'll check when the market opens, but I believe they're paying a 6% premium on that. And I was thinking, I like SoFi at $5. I think earnings are actually going to be pretty good. March 17th is the expiration date on that cash secured put. So do I think SoFi gets to $5 by March 17th? And if it does, am I happy to own the stock at $5? Both of those things kind of play out correctly. And again, this is because my average is so amazing in SoFi. That I'm, like if you have a really big average, do you want to buy $5,000 of SoFi? You might not want to, because you might not want a DCA. You just want the premium. But if you want the premium and you want the shares, I mean, that cash secured put, we'll check on Robinhood as the market opens, is actually not the worst cash secured put to get into, in my opinion. Bitcoin, it was hovering about 23,000 yesterday. Now it's down to 22,795. Got to 23,352. Look, Bitcoin has been a phenomenon over the past couple of weeks, going from 15,000 to 22,000. I personally have admitted many times I don't have the stomach to be able to deal with Bitcoin, because I just think it's just too volatile for me. This is coming from a guy who's quit his job to go build a startup, and Bitcoin is still too volatile for me. But as a result of doing that, I think if I actually create some value in the world, the startup will be valuable. It's not that Bitcoin's not creating any value. It's just that I personally have not been convinced of that many of the use cases of Bitcoin. Now, nonetheless, as a speculative instrument, it has a ton of value, but actual use cases, I'm not sure there's that many. Good morning from Costa Rica, gents. Mark, thank you for being here. Good morning, Ahad. You're Ahad won this thing right here in the back. This is being sent out to you today, Ahad. It is a Palantir. We had a little raffle. Ahad won it. So Ahad, you're going to be getting that hopefully within the next week. All right, 9:30 a.m., December 23rd, 2023. The Wi-Fi sucks, but that's okay, because the market still has to open. Wake your ass up. The stock market is open. You know what's so interesting about life? I finally fixed this microphone, at least to before, for the past couple of days, I was using this microphone because this microphone was being stupid. And now that I fixed the microphone, the Wi-Fi wants to be stupid. It's just like, you can't get everything you want in life. It's just like you want to get something nice and you can't get what you want. It's okay if Wi-Fi sucks. I can still hear you. Thank you, Vincent. Because audio, one could argue, is a bit more important than video. All right. Palantir at 705, NASDAQ 11,161. Alibaba, what a phenomenal recovery Alibaba's had over the past couple of months at 120, now up 90% from its lows at 58. Alibaba doing amazingly well. Netflix at 342. Netflix spent, again, $2.5 billion to acquire 9 million subscribers. That was $284 per customer. They would have to be a customer for 17 months in order for them to break even on that. So, I mean, we'll see if that turns out to be a profitable endeavor for Netflix, but their earnings overall wasn't horrible. Black Sky at 1785, Tesla 134, Roku 52, Neo 11, Neo doing nicely in the pre-market. PP, this is the Meet Kevin ETF at 1880, doing nicely up from its lows of 16. I believe the top two holdings here are Tesla and Enphase. So those are the top two holdings here. Now, DNA Ginkgo Bioworks. DNA Ginkgo Bioworks is a stock that I'm still excited about. It's at 169. I think this is one of the reasons I sold out of this company at $2.95 after having about a $7,000 position in there is because I realized that the macro is not going to treat biotech friendly. Ginkgo went up to $2 on Thursday. It went up, rallied 10.9%, nice $2. And if you would have bought at $2, you'd have been like, oh, this is great. Like, this is awesome. Now it's at 169, back down almost another 10%. And the reason for that is not really the stock. It's the sector the stock is in and the macro not giving that stock or that sector enough credence yet. Does that mean this is an accumulation phase if you're long? Absolutely. But does that mean that there's not going to be a ton of volatility to the point where the stock can get to 120, 130 if things get really bad? Yeah, absolutely. And worse than tech, because biotech is crazier than regular tech, and the macro, the markets have no sympathy for that. So that is one of the things to be aware about, even though I'm long on the potential of Ginkgo. It's just one of the most interesting synthetic biology companies that I've seen. Meta Platforms at 139. I didn't even know we're basically at 140 on Facebook. It's up 50% or 47% from its lows at $88 on October 13th. So, Facebook has performed pretty well. Question is Facebook still undervalued? I think earnings are going to be really important for Facebook. They're expecting to do $32 billion in revenue. Capital expenditures is the only thing you should care about. You should write a line in on the 10K when Facebook's earnings comes out. How much more are they spending? How much more is the metaverse going to be taking up of investors' capital? And is there any significant progress in the metaverse that justifies them being able to eat up that capital? Amazon at 96, Robinhood at 953, AMD at $72, Coca-Cola at $60, Costco at $4.79. Nothing too crazy. We've got Spotify that's up big off layoffs. We've got Tesla that's up nicely, and that's pretty much it for the day. Good morning, brother Siri. Good morning for being here. Tesla earnings on Wednesday. Yes. And we got to talk about this. GS Strategies said this week is very important. It either validates my bearishness or invalidates them. And I close my shorts at a loss and admit to everyone that I was wrong. It's interesting, Gabe, because so here's my thing. If Q1 earnings disappoint, then you have a chance to be correct on your short position. If Q1 earnings don't disappoint, like Apple, Amazon, Netflix, Microsoft is reporting tomorrow, actually. If they all put up really great numbers, is that still a bear market rally? Is that still a trap, right? Is that still like, okay, Q1 or Q4 2022 was good because of Christmas, holiday season, etc. But the real pain is coming in the latter half of 2023. I don't know. And so it's a difficult position to try to hedge and try to estimate. At the end of the day, like someone's going to be wrong, someone's going to be right. But I don't know if it completely invalidates your thesis on being bearish in the market short term just because earnings might go well. How many synthetic bio companies have you seen? I mean, when I was doing my DD on Ginkgo, I ran through a bunch of them. I think Amyris, ticker symbol AMRS, is the other major synthetic bio player. The problem is none of the synthetic bio players actually are creating a platform. This is why Kathy Wood has over 120 million shares in Ginkgo. I mean, the core reason is most of the synthetic biology companies are kind of like Netflix. They're making their own products and then they're selling them. And that's just not scalable. Like Ginkgo has developed this proprietary platform that allows other people to leverage and build on top of that. And they've had many use cases. Some of the most famous ones are cannabinoids and making synthetic THC for marijuana. And so you see the potential of synthetic biology. And if you're bullish on that in an abstract sense, then you apply it to the quote unquote app store of synthetic biology companies. Not all of them are not every app gets 1 billion downloads, but the big ones that do, a lot of that revenue comes back to Apple because they control that ecosystem. That is the bull case on Ginkgo. And so the question is management going to be able to, execute on that thesis at the end of the day? A lot of ARKG might end up being, one of the best performing stocks or the ETFs over a long time. It's just a question of if synthetic biology actually plays out to be the way it is. Okay, let's take a look at Mohammed El-Erian, one of our best analysis on CNBC. Again, guys, I'm really sorry the video is crappy today. I wished it wasn't like that. And then we're going to look into what investors should expect from Tesla Q4 earnings. So let's get into this, and hopefully the audio is at least good on this. All right, this is Mohammed El-Erian. Inflation has moved from goods to services.
And Mohammed, is this really the first time that we've had you on in 2023?
It is. I took some weeks off, and it's really good. And I don't know what has happened. Joe sounds like a globalist. You take him to Davos, and he comes back like a total globalist.
I'm feeling global after being there. No kidding. And you're feeling like a Bengals fan.
I am. Impressive performance, Joe. Congratulations.
Thank you. It was. Don't congratulate me. It's going to take me a while to start believing again after all the wounds, 30 years of 40.
That's Mohammed, 2 years in a row, Joe. I mean, you've got to start believing.
Burrow is making me a believer. I hope he doesn't wear one of those crazy outfits before next week's game.
Well, you become a globalist. I can't get over.
Can't expect to get that they're going to just be perfect, or any other country is going to be perfect. And we just need, right? That's how I became a globalist.
What did they give you to drink there, Joe?
Kool-Aid, obviously.
Yeah.
Hey, Mohammed, let's talk about what's happening this year. So far, the year is young, 23 days in, but you are talking about some pretty phenomenal rallies that you've seen in stocks and bonds to this point. You think that trend continues?
You are for 3 reasons, and you heard it. 1 is economic prospects have improved. 2 is the market feels inflation is mostly behind us, the problem. And 3, the Fed has signaled that it's going to downshift to 25 basis points. And not only have we done well domestically, we've done even better internationally with 2 big trades from the US to the rest of the world and into bonds. I look forward and I see many potential outcomes for this year. The one that Joe cited a few minutes ago is certainly a possibility, not a probability, but there's also others. So I think the year we're going to romance different outcomes with respect to growth, inflation, and the Fed.
Okay. Larry Summers was a little more sanguine about the environment, what the Fed's going to have to do, but he did make the point last week that the one thing we have to make certain is that inflation is really dead and it doesn't come back to haunt us, so that we don't have to fight this fight twice. I would assume you're kind of in the same camp on that.
I am. And the inflation dynamics themselves are not very encouraging, because what has happened is inflation has moved from the goods sector to the services sector, and that's much harder to contain. So I'm in the very, very small camp who thinks that they should not downshift to 25 basis points. They should do 50. They should take advantage of this growth window we're in. They should take advantage of where the market is, and they should try to tighten financial conditions, because I do think that we still have an inflation issue.
So Mohammed El-Erian is not in the same camp as Jeremy Siegel, the Warren professor. Mohammed El-Erian actually thinks there still is an inflation issue. Inflation has been reducing month over month. It'll be interesting to see February CPI. Look, if February CPI, if we can crack some of these numbers, if we can get from, what's it at, 6.1 to 5.5, if we get to 5.5, this is going to be a fun market, because I don't know what other excuses you have left at that point for this to be in like super, super bearish. I mean, just think about that. If we actually get down to 5% inflation from 9% 8 months ago, the Fed's going to have to think. I mean, they're really going to have to think. I know there's a lot of other factors and there's more stuff to think about, but the Fed's really going to have to think twice about how quickly we get rid of this, or we don't pivot from interest rates. Hey, mate, what do you think about a Palantir-Tesla partnership? You think Karpin must talk? I think it's been explored. I think Tesla is so vertically integrated that it's a little bit harder to justify Palantir and Tesla working together, particularly because Palantir software would have to kind of overhaul Tesla's vertical integration that they've done so phenomenally well. So I don't know if it would happen. I think Palantir, Starlink, and SpaceX, especially with Meta Constellation, has a phenomenal opportunity at it being a partnership. With Tesla, I don't know. Now, I did an article on dailypalantir.com. By the way, it's in the description. You guys can subscribe. Free newsletter every day about 5, 6 p.m. On ways they could work together, particularly in the EV charging space, especially Palantir's collaboration with Wejo and the operating system they made for electric vehicles. But I don't know if that requires Peter Thiel and Musk to kind of get along, and they don't have the best relationship. So, I mean, we'll see if that happens. But if that does, that would be really good. Question 2, Amit, Berkshire Hathaway, potential institutional investor for Tesla. I mean, let me know what you guys think in the comments. Berkshire Hathaway bought Apple when it was a $500 billion company. Tesla is now a $350 billion company, and they are one of the only companies in the world that's growing 40% year over year at the level, at scale at which they're growing. If I was Warren Buffett, I would put that stamp of approval on Tesla. I would let go of all my ego. I would be like, this is one of my final biggest trades that I'm doing, because I think that the market's so discounted where Tesla is going to be able to go. And, Buffett would have to change his entire conviction on tech companies versus, I mean, he doesn't invest in tech companies. He invested in Apple because he thinks they're a consumer company, not a tech company. And Apple is a consumer tech company. He would have to believe in the technology of Tesla for him to make that bet. He would have to not believe in, the market caps of Ford, Toyota, and GM for him to justify the premium he gives to full self-driving and AI. And he doesn't care about that stuff. If he did, I think Warren Buffett would get a lot of people excited about this stock. He would get all the Gordon Johnsons of the world, everything monies of the world to shut the heck up, because finally their granddaddy made the investment that they would never make. And I think it would be great for the stock. Now, will Buffett do it? Probably not. But if they could, that would be insane. Tesla could do $100 billion in revenue in 2023. LOL, $300 billion cap. Yeah, I mean, Tesla's market cap Tesla's revenue last quarter was $21 billion, right? So, I mean, you imagine 2023, they grow 40% year over year, even 35% year over year. They should be able to get to close to $100 billion in revenue. It's at that point trading at a price of sales of 3. It's a bit ridiculous. Let's go back into the market. Shopify is going up nicely. I saw Shopify was going up. I was a little confused why. I think there was something announced for Shopify. By the way, 210 people. Again, thank you for being here. I'm sorry for the crappy video. This hasn't happened in literally months. It's annoying. It's so annoying because I know you guys love my beautiful face and my beard, and you just want to stare at it, but I can't do anything about it today. I just can't. I woke up at 5 a.m. today and I worked out. I ran a full 4 miles this morning. It took me like an hour to run those miles, but I got the job done. So I feel great. Everything's awesome. And then the video is crappy quality. It is what it is. This is how Monday mornings are. Shopify, $42, up 5%. Let's go to the all-time highs on Shopify. There we go, 176. So if you were buying here in the $1,700 range before the split, this is where Kathy was buying, you would have been down a lot. It got to $23. So October 13th to 31st was really the bottom. Remember, Shopify was $23, bro. Like, that's insane. And I'm not saying it should be overvalued or undervalued. Just seeing the decline from 176 to 23 for a company that has such a fundamental impact in people's lives. I mean, like, a lot of people use Shopify. A lot of entrepreneurs make their money off of Shopify. It's interesting to see it get to that level. Market cap right now, $54 billion. If it's Shopify versus Amazon, it's an interesting discussion given they're both in e-commerce. Honestly, gun to my head, I pick Amazon. Shopify doesn't have AWS. Shopify and Amazon hasn't even tried to increase their margins. When they actually try to increase their margins, people say they can't increase their margins. When they actually try to increase their margins, I think that part of the business that's struggling in retail will get better. I mean, like Prime, there's just such a bull case for Amazon in the e-commerce space versus something like Shopify. Shopify is a great company. Obviously, Amazon's almost $1 trillion company. Shopify is a $53 billion company. The question is, can Shopify be a $400 billion company? I don't know. I'd rather have Amazon double than Shopify. Oh, I think the video is good. Did it fix? Hold on. Let's check on my YouTube. Let's stop sharing. The video, I think, is good. There we go. I got the little signal that the Wi-Fi thing is back. There we go. Perfect. Yep. Okay. Video's better. Great. Now you guys can stare at me and look at me in a nice way. Here we go. We're good. All right. Thank you. The video's fine now. But good morning, Amit. I think Uber. So my concluding thoughts on there is, like, I would pick Amazon over Shopify. Obviously, Shopify has more growth built in, but Amazon is probably the winner for me if I had to pick. Good morning, Amit. I think Uber is going to crush it this year. They're also going to EV and they're not doing any layoffs. Uber is a company I'm not excited about at all. Look, the reason for this is Uber made the venture capitalists rich. Uber did not make shareholders really satisfied. I mean, look at Uber. They went public in 2019, $40. They went down to 13 a year later, obviously COVID, whatever, ran up to 64. This was the meme stock mania hype. By the way, 64 is, let's do some quick math real quick. 64 minus 40 divided by 40. That's only a 6%. Yes. Hold on. 60%. 40 times 0.60. Yeah, that's a 60. So that's a 60% increase from $40 up till 64 at its all-time high in the meme stock rally. So it's like, all right, you're up 60% from IPO 3 years later from going public after being down close to about 70%. And now you're at 64, then you go all the way back down to 19, and then you recover at around 27, 28. The reason I'm not excited about this stock is because they went public at $40. This is why it's so interesting to do the numbers. They were a $100 billion company. Uber is not making enough money to justify $100 billion in revenue. In fact, let's actually look at some of these numbers here. Let's go a little bit more deeper into Uber. It's just never been a company that I thought actually cared about shareholders, especially because they haven't really pivoted from their core business. I mean, you have Uber Freight, but like, how much has Uber Freight really been able to do in order to get into a better place on their balance sheet? It's like, it's not done. But Uber, look, they lost $2 billion last year. So that's the first thing on Uber. They had a revenue of $29 billion, lost $2 billion last year. Free cash flow of $506 million, liabilities of $23 billion. And then if you look at some of the ratios here, let's look at these. Price to free cash flow on Uber is $120. Or sorry, 120. 120 times you're paying for the price to free cash flow in this ratio. Price to book is 9, not horrible, but price to free cash flow 120. And again, we've talked about how free cash flow is the real best way to generate an understanding of a business. The price you're paying for for $1 free cash flow on Uber is 120. 120 times. I don't think that's worth it. There's a lot of better companies that are cheaper that have way more growth potential than Uber. I mean, pick any of I would pick Netflix over Uber, just in terms of like, Uber is already at a $60 billion market cap at $30. Like, it's just not worth it to me. The level of growth. And again, yes, they're pushing EVs and a lot of things are changing here. Why won't Tesla's robotaxi network, if that's the bull case for Uber in the future, right? That there's like a self-driving network, why wouldn't Tesla just beat them? I mean, why wouldn't they? You could argue that would happen. So at that point, it's a little bit harder to justify Uber. Let's get into what investors should expect from Tesla's Q4 earnings. I think the Wi-Fi is a little crappy again, but let's still play this video and see what we have.
Tesla's big week is Tim Higgins, Wall Street Journal reporter and CNBC contributor. Good morning to you. What do you think we should be expecting, Tim? And as you've been talking to all of the sort of investor community and those around Tesla, what are you hearing?
Well, it's probably a record. I mean, a record profit for the quarter. But really, what analysts and investors are going to be looking for is that kind of excitement for the rest of the year. Can the company do 50% sales growth as it's been talking about in the past? Now, it missed that target last year, and that was a big hit to the stock, a big hit to the reputation of the company. So going into this week, it's really all about the future. Can Tesla get back to that growth stock story that it has fueled that excitement for so many years?
How much of the fall off in terms of where the stock is, do you think is a function of the macro, which is to say, obviously, the multiple on tech stocks across the board has come down? How much of it actually is the growth story at Tesla? And how much of it is, do you think, the anxiety or nervousness? I don't know if you just think it's headlines about it, about Elon Musk's attention on Twitter, if you believe that that's taking away from his attention on Tesla.
It seems to be a mixture of all three. Clearly, the company didn't perform as promised. And that's an issue. You got the macro issues that we've talked about, but it also comes down to Elon seems to be distracted, and perception is reality. And that kind of reality for Elon at this moment is that a lot of investors have this perception that he's maybe his hands are not on the wheel, and then he's been distracted with Twitter in the last 3 months. So one of the things investors are looking for this week and the weeks to come is this idea that he's re-engaged at Tesla and that that the company can be prepared for the possibility of recession this year.
And I think the question, though, is, given your own reporting, is that the case? Meaning, is he focused more on Twitter these days? And even if he is focused on Twitter, one of the things that's so interesting is he's had a same management team at Tesla. I mean, there has obviously been turnover over the years, but the current team is the same team. And you look over at SpaceX, Gwynne Shotwell's been managing that business. So how much is the investor community supposed to take away from, his personal involvement or personal attention on one specific company at a time?
Well, it's very hard to understand exactly how he prioritizes things in his mind. I mean, the average person couldn't handle running 3 companies. He's not the average person, right? So, to kind of the idea of what his engagement level is tough. He would say, and he has said, that he's still engaged in Tesla, and that the signals are that the Twitter is going to be almost kind of a hobby for him. But still, investors out there are concerned, and they've been airing those concerns in a rather remarkable way over the last few weeks, asking him to get back into the seat at Tesla, to put Twitter in the hands of another CEO.
It is going to be very interesting to see how the Tesla quarter plays out, especially because you have those two conflicting viewpoints, right? People who still care about the Twitter drama and people who simply care about the fact that, look, Tesla cut their prices, and like now they're really they're kind of forcing the auto industry to show his hand. It's like, look, how well are you going to be able to cut your prices to be able to compete with what consumers actually want, which might just be more Teslas when it comes to EVs. Artist here says, hard for useless people to understand that Elon is managing mature companies with highly engaged employees who take pay cuts to work for him. Elon also responded to a tweet the other day that said Tesla has like 1,300 employees. Elon said, actually, no, we have 2,300. And so a lot of the reporting on this has just been false. And those 2,300 employees actually want to be there. They're not like the level of employees that didn't want to be there. Whoever didn't want to be there is left. And yeah, there hasn't been a lot of Twitter drama over the past couple of weeks. I mean, like, at the end of the day, Twitter is operating. It's working. I'm assuming it's growing. And the advertising business seems to be doing fine. Now, I know Elon Musk also said that he's releasing a premium subscription to Twitter that you don't have to see any ads. It'll be interesting to see how many people subscribe to that. Basically like YouTube Premium. But so far, this whole idea that Twitter was going bankrupt has not played out yet. We'll see if it does play out, if things get really bad. And if it does, I think Elon will be vocal about it. And he's going to get a lot of people to sort of help him save the ship. But I don't know. It doesn't seem like it's the worst thing in the world yet. It doesn't seem like things are going that bad. Tesla product roadmap is totally clear for the next year. Yep, including Cybertruck, which is going to be interesting and fun as soon as that gets onto the market. Imagine looking Warren Buffett in the face and telling him about your 100% Crocs stock portfolio has vastly outperformed him in the past 16 years. Yeah, Crocs is up. I know Joseph Carlson invested in Crocs and he took out a 45% profit on them, but Crocs just kept going higher. Fundamentals of Investing podcast. By the way, I'll be likely live streaming a Tesla earnings recap with Tevis. For those that don't know him, his comment is highlighted right now. Tesla was 50% of his portfolio at one point. I think it still is. It's a great deal of his portfolio. He's been bullish on them for the past couple of years now. And he understands the company better than a lot of people on YouTube, to be honest. So I'll be doing a live stream with him after earnings, kind of analyzing it, probably around 7-8 p.m. Eastern on Wednesday. So after you watch your Rob Mauer, your Stephen Mark Ryan, then you can come on to little old Amit and Tevis and listen to us talk about Tesla. Can expand more on Wednesday, but it's a war of attrition that legacy autos can't afford to wage. There's no margins. Legacy auto does not have the margins for this. And I think Farzad made a good video about this as well. It's like, look, if you don't have the margins, you can't do anything. Like, you don't got the margins, my guy. Like, you're like, at that point, where's the margins? It's an FSD. And if Tesla's selling FSD, then that's going to be their growth story. Let's go back into the market. Tesla's up 3.8%, as Blake points out in the chat. Now at $138. Not bad. I mean, Tesla's up. Netflix is up at $350. Now I'm thinking a little bit more about buying puts on Netflix because the $350 thing seems a little stupid. But we'll see, man. I mean, this market can get crazy. You know what I'm actually okay. So let's look at some cash secured puts. I want to see the strike prices. I am wanting to buy about $5,000 worth of cash secured puts on SoFi, because I think the risk reward here is actually really interesting right now. So let's go to SoFi. Let's present share screen. Someone said Palantir sucks. You are delusional. Well, someone's going to be right. Someone's going to be wrong in the next 5 years. We'll find out. Look at SoFi, 578. Goodness. All right. So if I wanted to trade SoFi options, everyone should be able to see my screen. Now, again, a cash secured put is bullish. For those that don't know what it is, I'm basically buying I'm asking for the right to buy shares at a certain price. And if the price of the stock does not get to that point, I get a premium that I get to keep. And I have to give some money as collateral as a result of me being able to get that premium. If the stock does get to that point, then I have to buy the stock. But if I'm long on the stock, I'm bullish, then my cost base is reduced because you take the amount I have to pay minus the premium divided by the number of shares I have to buy. So even then, it's a bullish strategy because my price still gets lower. So if I think that SoFi will be at $5 on February 24th, I would get $21 right now as a premium. Okay, so that's not the best premium. If I say it's going to be at $5.50, I would get $39. Now, $5.50 is a little bit easier to get to from $5.78 than $5. Let's do March 17th. March 17th, if I think SoFi will get to $5, I'm going to get $30 of premium. 30. If I think $4, you get 9 cents. So $30. So that means, for example, if we were going to do this, let's do this one. Why isn't it adding? Oh, I have to add it. Okay. Now it's $29. It changed right there. So if I were to do this, that means if I were to buy 10 of these, I would get $290 and I would have to put up $5,000 in premiums, meaning my argument is that I am willing to buy 1,000 shares of SoFi at $5 each, $5,000. And I have to put that as collateral. I have to let go of that money till March 17th. I can't see that again. And if the stock price is at least at $5.01, I will get to keep this $290 as a premium for taking that risk. If it does get to $5, let's say it gets to 5, you got 5,000 minus 290 divided by 1,000 shares. I would be getting SoFi at $4.71 as my average to be able to purchase it. It's not a bad. It's just a question of I've been thinking because I wanted to make a play on SoFi before earnings because I think the earnings is actually going to be really good. I could be wrong on that, but I think Noto buying and I also think their earnings growth is just. I mean, their member growth is. I mean, last earnings, remember they blew it. They were up 18%. Now the market took them back down because it was the market, but like 18% is like not bad in a day. And I don't know, man. I don't know if we're out of the 4s, but if we are, it's not a bad premium. I mean, what's that? 290 divided by, it's like what, 5% premium? It's it's about a 5.8% premium, almost a 6% premium. So selling a $5 put strike on, but February the premiums aren't that good in February. I mean, they're okay, but they're not that amazing. I mean, why would you do anything with SoFi 7 days before earnings? Well, again, remember, I'm not buying the stock. I'm buying a cash secured puts. And I think earnings are going to be good. So I think that that momentum is going to be able to sustain itself to the point where the stock doesn't get to 5. Now, could I be wrong and the earnings suck and the whole thing falls apart? Yes. But even if that's the case, if the stock gets to 5 or below 5, I'm happy to buy it at that level because I need more SoFi. I personally want to get that position to be much more stronger than it is right now. And so if I have to do it via cash secured puts versus buying the shares outright and being assigned the shares, I'd rather, I mean, SoFi at 471 is not a bad average to me. I mean, that'd be nice to get it there. I sold the $5 Tuesday. How much premium did you get on that, Ahad? It must have been a good premium last week, right? Or at least a better premium. Feb 3rd, $5 put is awesome to sell, $32 premium. Okay, let's look at that. Let's look at that one. Oh wait, no. I think I did. Oh no, I looked at Feb 17th, right? Hold on. Let's look at that. So if we go to February 3rd, 5.5, $31 premium. Yeah, that's not bad. Wait, hold on. February 3rd is right after. Okay, so we would have to assume the market doesn't tank SoFi back down to 5.5. That's what we would have to assume. Yeah, it's not a bad premium. It's not a bad premium. How much? Wait, so if I buy one of these, if I buy one, so if I add this, hold on, I have to get rid of this one. I have to get rid of that. Okay, so I have to add this one. And this one would be $1, gets me $31 of premium. And I have to put up $550 worth of. Yeah, that's not bad. That's not a bad one. That's not a bad one at all. You're selling puts, not buying puts. Did I say buy put, bro? Every time I say buying puts, I guess I'm so annoyed every time I say buying puts. No, yes, you're correct. I'm selling puts. I'm sorry. 31 cents. You got 31 bucks as premium. That's not bad. That's not bad either. And what'd you say? $5.217. So that means by February 17th, it shouldn't be $5 and you get to keep that premium. One of the many reasons I follow you is because I almost have the same stocks as you do a bit. Yeah, I mean, look, that's the nature of social media, right? You follow people that you care about, the stocks that they care about as well. I love how on the podcast talking solely about SoFi, you guys can't do an episode without trashing the app. Bro, the app sucks. I'm not gonna lie. The app sucks. It's a bad app. It's just not, it's still right. I'm using Robinhood to buy options over SoFi. I should be using SoFi, so it's bad. A bit. What is your overall returns on all your investments so far? Pretty bad. I think I'm down probably like 40% all time. Granted, I started investing 2020, and I was one of the few people that did not make a lot of money in 2020 because I was so new to the markets. I was just doing a ton of dumb stuff. And yeah, look, I sold Tesla. If I had just kept my Tesla, I would be up like 400% over the past 2 years. I sold Tesla for a loss way too early. I mean, like, this is the type of dumb shit that I was doing. So I think I've matured a lot. The returns have not caught up to me yet, especially because as soon as 2020 ended, we entered into a horrible bear market. And then you get into that horrible bear market and you're like, all right, well, now the returns really aren't going to be there. But I've learned a lot, and as a result of learning, now we're just preparing for the next 5-6 years. How do you think Palantir earnings will be? So I'll do a better recap on this. We're going to probably end the stream now, but I think earnings are going to be okay. We would have to get about $503 million of revenue to break 1.9 billion for the full year. Do I think we can do it? I don't know. I think EPS is going to suck because of the SPAC losses. I think Karp has been pretty determined that U.S. commercial growth is growing well, and he's all but said that the growth has been phenomenal on interviews. The question is, does that match up to the earnings expectations? I don't know. I have no idea. I wouldn't be surprised to see Palantir go down to 550, 570 if the earnings are bad. But let's see. It's at $7 right now. It's been doing pretty well. So we are going to see. My dude, you are too honest. Humility is good, though. You'll grow immensely just because of that. Excited to see you grow. Yeah, look, I mean, I think a lot of people, you guys got to realize I'm not a financial advisor. I'm not some crazy investor. I didn't have like the 5,000% gains that a lot of YouTubers had on Tesla. I'm just a guy that's trying to figure it out. And I think that's actually, and I would say I'm a decent communicator as well. And so I think that's what appeals people to my channel at the end of the day, if I'm being honest. It's like, and people have told me this, like, they don't watch me because they want the best financial advice or the best financial analysis, and I'm trying to get better at that. They watch me because of A, personality, and B, because I'm just trying to figure it out like a lot of people. And I'm not a guy who got crazy rich off the bull market. So I'm trying to learn what price to free cash flow is. I'm trying to learn what the hell a cash secured put is. I told my dad about cash secured puts yesterday, and he was like, holy shit, you're a genius. Because my dad drives a truck. He doesn't know about any of this stuff. So it's, it's just exciting to get that wealth of knowledge and and give it to as many people as I can, and hopefully break it down in an interesting way so that when people are watching me, they kind of feel there's a sense of relatability, and the gains will come. I mean, we give it 4 or 5 years, the gains will come if we're right on the stocks that we've picked. And I think that SoFi, Palantir, obviously Tesla, those are the right stocks, and we'll see. Until then, it's fun analyzing the market and having fun with it. The fact that you're an entrepreneur will make you an amazing investor. Patience will pay off. Appreciate that, Arnie. Everyone got to check out Arnie Investing's channel. He's doing a new live streaming format on Palantir content. I think it's going great for him, so definitely check that stuff out. And yeah, I think as an entrepreneur, you learn how to become a better investor as well. And, you keep going from there. That's pretty much it. Will you cover Palantir earnings live? Yes, absolutely. Absolutely, I will. So definitely make sure February 16th, we will be here live on this channel. Amit, did you tell your dad about FSD? No, I didn't. My dad likes Tesla, but he doesn't know the bull case on FSD. So one day I'll have to tell him on that. All right. That's it for me. Thank you all for being here. I appreciate it. January 23rd, 2023. Thank you all for joining me. I have a couple more videos coming out today covering some Netflix stuff, covering some Palantir stuff. There's There's another video. Oh, I'm actually doing a response to the Daily Wire Steven Crowder beef. If anyone's been keeping up with that, it relates back to technology. So video will be out. And then maybe another 1 or 2 videos. So that's it. Thank you all for being here. I appreciate you guys. Have a great Monday to start the week. Last week of January. I'll see you tomorrow, 9:20 a.m. Eastern. Thank you, everybody. Bye-bye.